afternoon, everyone. Phil Simons here with Columbia Grain and your Friday afternoon weekly market recap. The whipsaw action continued this week with all eyes focusing on the headlines over the Russian-Ukraine border tensions and the political implications that this may have on the world trade execution. I hate to say it, but all other fundamental factors continue to take a back seat at the moment to the will they, won't they question on the political front. So expect to see the continuation of uncertainty being baked into the markets, bringing with it very high price volatility. But be sure to take advantage of these knee-jerk reactions the current situation is causing on the day-to-day price action and get your pricing orders in place. This week was again another prime example of high volatility in the commodity complex. So let's take a look at what we saw throughout the week. But starting out with corn, we can see that the overall trading range this week for corn was 23 cents. And actually at the close, we were able to hold on to 3 cents of that overall range. The interesting note here is that you can see from Friday's close, we were actually pretty close to the overall high this week, which is a nice sign to see. Looking at soybeans next here, you can see that the weekly range on soybeans was again pretty high at 66 cents throughout the week, and we're actually able to hold on to 14 cents of that range. Again, in the soybean pit, we did close today pretty close to the weekly highs. So again, a nice trend to see in that regard. Moving over to the wheat complex, we see wheat, Chicago wheat had an overall range of 40 cents and closing the week out with a net weekly loss of 5 cents. Kansas City had actually a pretty big range this week for Kansas City of a whopping 71 cents and was able to hold on to 9 cents when the dust settled here today. Again, we didn't close at the highs in Kansas City, but closer to the high end of the range than we were at the low end of the range here this week. Minneapolis wheat, we can see the overall price range was 32 cents, and we actually closed the week with a net weekly change or net weekly loss of 3 cents over in Minneapolis. So you can continue to see that the knee-jerk reactions and the high price volatility is going to be driven by any political headlines that we see coming front, especially going into a longer weekend like we are right now. But we also need to remember that February is the month when the projected prices for corn, soybeans and wheat and spring wheat are calculated from a revenue insurance purpose standpoint. We still have one more week of trading in February, but the current monthly running averages have corn coming in at $5.85, which is $1.27 ahead of the number that we had last year at this time of $4.58. Beans are currently coming in the middle of the chart here that's on your screen at $14.25, which is $2.38 ahead of where we were last year of $11.87. And spring wheat is currently averaging $9.04, which is again $2.51 ahead of the number that we had last year of $6.58. So again, it is important to really get your orders out there and take advantage of the knee-jerk reactions that we're seeing in the current markets. And remember, the perfect strategy works every time until you start to use it. Have a great weekend, everybody. We'll talk with you next week.